Good morning, good afternoon, good day. Welcome to my weekly market roundup 23rd January 2021. I'm Sagar Nandi. I used to work in IT. I have retired now, swing trading stocks using the Q systems and techniques that I developed. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website, YouTube channel and Twitter page. You are most welcome to make use of them. Hi, Dr. Jeffrey. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the systems I use in my live trading, and in today's session also I will use the same systems. That was the last slide of my presentation. Let's start with the global market analysis, starting with Australian index AXJO, that is continuing to move inside a range. It did go above the watermark resistance, but I am not a breakout trader. If at all we wanted to take a long trade, we would wait for a pullback, probably a small pullback, because it didn't break out a lot from the watermark. A pullback and then trending up again. That would give a trend following long trade. Instead of trading the index, of course, we would look for strong fundamental stocks in strong industries to buy. One positive thing about taking long trades here is that weekly has a trend line support. It is continuing to be bullish. Let's look at Japan's Topics Index. I see my chart is refreshing frequently. Let me change the setting. During the webinar, I don't need it to refresh frequently, so I can make it for 5 minutes. Let's look at Japan's Topics Index. It is also continuing in an uptrend, too close to the upper boundary line. As I discussed in the Wednesday's webinar also, the weekly candles for 2 weeks is not bullish, not bearish also. The shapes are mixed and the color is also neutral. No bearish setup, but I may be cautious about taking long trades. It is in an uptrend. Next is Chinese index CSI 300. This is clearly more bullish than Australia and Japan. Here the weekly backdrop color is bullish. The weekly shape is also bullish. Friday's candle shape and color is also bullish. On Thursday, it gave a bullish flow. That might be a time to take long positions in individual stocks, not in the CSI 300 index probably, because it was already at the upper boundary. But when it gave the go with flow long setup, you can see the weekly backdrop was bullish for many weeks now, didn't change color. So on Thursday it gave a go with flow long trade setup. Because it was near the upper boundary, I could look for buying opportunities in individual stocks, also bullish. Next is UK's market index FTSE. This is not as bullish as Chinese market because the weekly color is yellow, weekly displayed a bearish headwind here. The daily is still in an uptrend. It is still bullish but not as bullish as the Chinese market. And the strongest of the global markets was India market for many months. Let's look at it, Nifty 50. Looking at the weekly, it is still bullish. I mentioned, and of course you could note the bearish headwind in the weekly chart 2 weeks ago. You would be cautious from that time. Daily also displayed a bearish headwind on Thursday. However, if there is a trendline support nearby, we are not going to short the instrument. So we wouldn't short anything in the India market on Thursday, though there was a bearish headwind in daily and the weekly color was also yellow. The trendline supports provide great support, so not going to short that, not using daily chart. However, if you kept an eye on the bearish headwind in daily and weekly bearish headwind 1 week ago and the weekly yellow color of the current week, you could try an intraday short on Friday, and that would be very profitable. That is the key technique of taking intraday trades. The technique does not start with intraday chart. It starts with weekly daily to see if there is a weakness or a shorting opportunity, and then use the fine-tuned chart to take the actual short trade. Usually I discuss such trades for the USA market, but let me demonstrate how it could be taken in Nifty on Friday. Because I'm going to check India market, I need to change the session start and end times. I have set up, you can see here, two different options, one for India market, one for USA market. They just change the market specific settings like session start, session end time, and the benchmark index. They are different for different markets. If you are trading in many global markets, you may have multiple setups like that. So I set it up for the India market. Now let's open Nifty 50 using Q fine-tune chart. This is Thursday and this is Friday. On Thursday in the daily chart there was a bearish headwind. Therefore on Friday we would be ready to take a short trade if the fine-tune chart gave a proper trade setup. Let me magnify the chart. Soon after market open, the early range high and early range low formed on this bar, and I'm using 10-minute bar now, but during trading hours I'll be using 5-minute bars. Okay, why don't I change to 5-minute bars? Now I'm using Q fine-tune chart, precision entry chart, 5-minute bars on Nifty 50. On Friday, early range high and early range low formed. Here price tried to go below early range low but recovered with a very bullish shape candle. So you would wait. Few times it tried to go above early range high, but we were not going to take any long trade because our directional bias was already decided based on the weekly daily chart. Again here price tried to go below early range low but recovered, so we are not going to short there also. We would short right at the close of this candle when price decisively closed below early range low. So our entry price short trade would be here, this price level, and because it was an intraday trade, our stop would be just above early range high. In this case there were few candles that went above early range high, so our stop would be above day's high at this price point. So our risk distance would be this much. When price went to this pause level or even before that, the risk distance was covered. So using Q guideline we would book profit. The Q technique relies on just, and I'm using the word just, though it is not as simple as using the word just. It needs some practice in my experience. Still, let me use the word. It needs just 60% success rate and 1:1 reward risk ratio. So we don't need to. You may, but I don't advise, and I don't want to also in my own trading. I don't need to try to make a lot of profit in a trade. So long as the risk distance is covered, I'm happy to close my position, at least partial position. And if I had, for example, 3 futures lots shorted on Nifty, I could close 2 and hold 1 lot at the original stop, which would be closed at the end of the day. In case price went up, the remaining lot would be stopped out. I would still end up with a profit because 1 lot would get stopped out, but 2 lots had profit and the reward was more than the risk. That's how, if one is trading multiple lots, one may book profit and put a stop in a way that it is a guaranteed profitable trade by the close of the day. The same technique can of course be used in USA market. USA market is much more liquid. You will have many more opportunities in the USA market using the same technique. What is the technique? Identify a weak instrument using weekly, daily Q signals and take the intraday trade using fine-tune chart after market open. What are the entry mechanisms? One is early range breakout. Because this was a bearish trade, we are going to only take early range breakout in the down direction. Another technique could be, and in this case we didn't have the signal, another technique would be if the instrument went up, stopped at one of the major pivots and displayed a bear release signal. Then our entry would be even lower risk. Then our entry would be right when the bear release signal came. Stop would be just above that recent high. This technique using bear release signal at a major pivot and accompanied by high activity at the same time, somewhere here, that gives a lower risk than using the early range breakout technique. But as you can see, sometimes that opportunity using bear release may not come. Now if you wanted to use only the bear release technique, you could do that. Then you wouldn't take the short at this point. You would wait to see when it gets overbought. And you can see this was the opening of the day. The only time when it became overbought on this 5-minute chart was here, shown by the stretch band indicator. When it was overbought, then you are getting ready to take a short trade when the bear release came, which came in the next bar, that is on this red candle, and it did reverse from a major pivot level. The red pivot, which is yesterday's or previous day's low, is also a major pivot. So the second technique that I mentioned would be applicable at this point. It reversed from a major pivot, displayed a bear release signal. If we use that technique, see how much narrower our stop would be. The entry price would be at this point, right when the candle closed with bear release. Stop would be just above the recent high here. And when price came to this pause level, again much more than the risk distance was covered, we could easily close partial position and hold on to partial position. Now let me explain why I prefer to put the stop for the remaining position at the initial stop level. This is a good example, and I didn't prepare for it, but the example presented itself. If I used trailing stop after exiting partial position, when the price went up here, most likely the trailing stop would be hit. But because I was holding on to the remaining position at original stop, the stop would not be hit and it would fall further, allowing me to capture a bigger profit on the remaining position. The more you study whether this intraday entry exit technique or swing trade entry exit technique on daily chart, you'd realize that after exiting partial position profit, if you use trailing stop for swing trades, most likely the trailing stop is going to be hit. What does it mean? It means that trailing stop on partial position is not really a, I should say, not an efficient way of capturing the profit. If you want to book partial profit, keep the stop at the original stop loss level. Don't use trailing stop because trailing stop is going to be hit much more often than not. If you are thinking of using trailing stop, it's probably better idea to simply close the entire position at the initial profit level. There is a question from Fran, hi Fran, about how to learn about these techniques. On my website sagarnandi.com, there is a top menu bar option with a graduate's hat. If you click that, it has a suggested study sequence. It takes a while, but I suggest that sequence, or you may alter that. Simply go through those steps, that's all. And you may also ask questions in this and Wednesday's YouTube live session. After you go through the material, you may write down the questions. I am happy to answer them. Now, coming back to the chart, another technique that people may use is apply the concept of trend following trade using this precise entry template. The same technique that I use or you use using Q systems on daily chart could be used on the intraday time frame. What is the trend following trade idea? Let the instrument be in a downtrend, then wait for price to go up, then give a bearish flow candle. If a bearish flow candle is coming in a downtrend with lower high, lower low, that is technically a go with flow short setup. So one could enter the short at this point and go with flow short setup. Stop loss is just above swing high. This should be the stop, this should be the risk. And again, once price came here, more than the risk distance is covered, it's safer to simply close the trade. You may use the go with flow technique also. Now, if you are using this chart in real time, and now it is not real time, market has closed already, then sometimes you would also see, and let me change the color, it would create support trend lines. If that is so, if you find support trend lines on 5-minute or 10-minute interval precision entry chart, when the support breaks, that gives a breakout trade entry opportunity on intraday chart. Again, these techniques, whether using the bear release at pivot level or the magenta color, magenta flow color, go with flow setup, or the breakout setup, they are exactly same on the daily chart. The same technique can be applied to the intraday chart. Now, one thing I would like to add, that when price is inside the early range, it is just near the opening price. It has not decided. We don't know yet whether price will go up or not. So personally, I tend to avoid taking a trade when price is inside the early range. Inside the early range, we don't know the direction yet. In this case, I was going to take only short trade. So what does it mean? It means that I might be reluctant to take the short trade on this candle using the go with flow short setup. Why? Only because it was inside early range. So I could apply the go with flow short setup, but I would take the short on this candle, which would be also the same candle where the early range breakout setup came. Now we may go through some charts maybe today or maybe another day when we have more time, more intraday charts after analyzing a stock using weekly daily to identify precise entry points, and these are very profitable entry points, not in terms of dollar value but in terms of the reward risk distance being filled quickly. The reward covers the risk very quickly within the day, within couple of hours, usually before the lunchtime starts, the New York lunchtime 12 noon. Before that usually it will hit the profit and or hit the profit or stop loss, and we just need 60% success rate because our directional bias is based on weekly daily. It tend to work very well. Now some more things I would like to explain, and I am explaining step by step. When I am taking a short trade, this was the market futures, so that is fine, it just trade the market futures. But I would like to look at multiple market instruments at the same time. For the USA market, if I go to Q Elite on TradeStation, I keep an eye on the intraday market breadth, where I keep an eye on NQES E-mini futures, or I could look at SPYQQQ also and some intraday breadth information. On another monitor, I might keep an eye on the four major market indices or ETFs, SPY, QQQ, DIA, IWM. Now for all global markets also there are instruments like this. And why I am explaining this is that I am adding some things in favor of my trade, and when I add that thing in my favor, this point could be an entry point. Why so? Let me explain. Let me open a chart for the India market that has multiple market instruments, and this is the chart. Here to fit them together I am using 10-minute interval. That's fine. I was so far discussing Nifty 50 futures, that is the major market index. It's like S&P 500, the major one. And I was considering taking a short somewhere. Okay, let me change to 5 minutes. I was going to take a, okay, this is the, in the other example I was looking at the index, not the futures. So I'm going to get the exact instrument. Nifty index and futures may vary slightly. Now back with the index, the one that I was using so far. I was explaining that at this point I would be willing to take the Goith flow short as well as the early range breakout technique short. And then I wanted to add some more insight from other market instruments and explain that I would be okay to short on this candle also, keeping an eye on the other two major market instruments in the India market. In USA, it would be equivalent to looking at the market details. What are the other instruments in India market? One is Bank Nifty. The financial sector is heavy in the India market. So you can see the financial index, Nifty Bank, didn't recover. After open, it came down, then continued to drop, which is different from Nifty 50. Nifty 50 recovered to early range high. Nifty Bank never recovered to early range high. And then I have the broader Nifty 500 index that also went to early range high, couldn't go above that, and it was also starting to drop because multiple, and meaning all the market instruments were weak. Was that all? No. Let me add one more piece of insight, and I am now going to Q Edge. Here currently I am using USA market. Most of the market roundups I spend time on USA market, but during market hours, India market, I also, if I am interested, you could do that for China, India, Australia, Japan, UK. You could keep an eye on your market, India market in this example, and you would know that on Thursday, the real-time parameters were all very bearish because there was bearishness everywhere, broad and deep and wide in every way, in terms of sector, industry, stock as seen from this Q edge, and in multiple major market instruments. That was a case I was okay to short the future at this point because the probability would be higher that it would continue to go down. That was a case where you could consider shorting here, but if not, no harm. You don't have to take an early short entry. You could always wait for early range breakout, which would also give a go with flow setup, but outside the early range. That would be more risk averse, and in fact over long term, whether you are risk averse or little bit risky, like whether entering here or here over 100 trades, your profit will be same. It's not that entering little bit early you are going to make huge extra profit, not so. It's just related to how a trader's temperament is. Profitability wise, I think both will give the same result over hundreds of trades. So that is a technique that you may use for global markets. I explained it using India market. You could do that for any other global market. The same technique that you could use, of course, in USA market. For USA market, you could use Q Global as I explained, or you could use Q Elite on TradeStation. TradeStation is a very solid platform, of course, for real-time charting. So if you are trading in US, for entry, you might use Q Elite. If you are using in trading in another global market, of course, TradeStation is not available, then we can use Q Global. One thing I suggest, if you are willing to try out these precise entry techniques before taking the trades, study the weekly, daily, decide on a trade entry direction, and then observe in real time and maybe take a trade on simulation for a couple of days. Make sure you are able to catch the reward that is at least equal to the risk, and you are having at least 60% success rate, and then you may confidently start to trade intraday, but the trades would usually exit within first 2 or 3 hours. Entry would be within first 30 minutes or so, and it would exit within first half of the day. It's not that we have to sit in front of computer whole day, and if we don't have an entry in the first 30 minutes, probably that is not a day to take a trade. Now the other question is, and I am spending more time on this technique today. I'll come back to the general topics of market roundup. The question is, how do I find the stocks where I am going to look for these opportunities? That could be done using Q Finder, that is based on Q Global, that is Metastock, scans or explorers, or of course it could be used using TradeStation, sonar or radar. The stocks that open strong usually tend to remain strong. So what you could do, add symbol list. Let's add a smaller symbol list. Let's say the stocks with liquid options in the USA market, and in Q radar there are multiple columns. One is the C plus minus, shows change, percentage change from previous close. Here I am using daily interval. In the second column you can see, and then we have a column gap open. So right after market open, this radar will start calculating and showing everything. Remember, on another monitor or the same computer, if we are using a laptop traveling, maybe the same computer, but you may keep an eye on the futures or ETFs along with the market internals. You see that along with Q edge also. If everything is bearish, then you are going to go to sonar, look for gap down. And I can see yesterday in this list there was no, okay, there were three gap downs. So if market is weak, Q edge is weak, market ETFs weak, internals weak, I'm going to look at gap downs, or I could sort by double clicking on the columns to sort. I could sort by the change from previous days close to see which ones are going down. Now of course market is closed, but radar works in real time, so you would be able to find the weakest stocks right at market open. And as you can see, the more my calculation is getting completed on radar, we have more shorting opportunities. The ones that are weak at the open, so these numbers would be different at open, but the ones that are weak at the open usually tend to remain weak at the close, especially when the market is weak, as we can see from market internals, especially when Q edge is weak, showing sector, industry, stock, everything is weak. That is how you can decide the trade direction and then short by either gap open or change from previous close to look for either bullish or bearish. So yesterday if we did that on Friday, then we see IBM, Intel, ISRG. Isn't it beautiful? Why I say beautiful? That ISRG is a shorting idea I shared. Did I share? Where did I share? Let's look at the forum. I am sure I shared it. And I will come back to this point. No, not here. Not here. Okay. So I shared it in one of the videos, and you would know that that time market was not weak. Even today market is not weak, but I shared the shorting idea on ISRG and I didn't check it out. Let's check ISRG. Beautiful, no? It dropped after earnings. So if you traded with verticals, then it would be okay to hold the trade across earnings and it would come out with a great profit. Why I noticed ISRG and came to this chart is that if you are following the 360 degrees technique, that is taking long or short only when every forces, all forces, not every, all forces, what are the forces? Market level, sector, industry, fundamental, technical. Then even if the market is against you, because the sector, industry, I prefer industry more, and fundamental, technical is in favor, I use this phrase, it is difficult to get stopped out. Difficult. It gives you an opportunity to close the trade with at least break even, but mostly you will come out with a profit, as was in case of ISRG. And ISRG was not the only case. If you remember the last weekend webinar, did I share any long trade idea? No. I said I was cautious, and I also mentioned exactly this, that it was much easier to find short trades. So I shared only shorting ideas and I did take them. I mentioned about that. After that, in this week, market went up. Did my short stop out? We'll find that out. Let me go through the market. But before going through the market, I explained that how you could use precise entry techniques to take short. Let me look at ISRG using intraday chart now. The technique that I was explaining on Nifty 50 you could use on ISRG. ISRG, remember, I was already bearish earlier. So yesterday on radar, if it came as one of the weakest, and it actually opened very near previous day's low and started to go down, so we could take a short using early range breakout technique. Our stop would be above early range high, and when price came to one of these pause lines, risk distance would be covered, and as an intraday trade we would close the trade with profit. So that's exact same technique we could use to short it using early range breakout in India, whether it's India, global, any other market or USA market, you could use the same technique. So sonar is very useful in finding the gaps or the ones that are moving significantly up or down. And if you are using Q global, here also you can find the gaps or the ones that are moving significantly relative to previous day's close. Both are in real time in a way. Of course, trade station is in more real time because the radar itself is refreshing tick by tick. So we looked at global markets. We looked at how you could take precise short entry in India's Nifty 50, and we also saw how you could identify such trades using Q Finder for global markets and using Q Finder or Q Elite for USA market. Global markets are bullish. What about USA market? Let's look at the market ETFs. And this I have been saying for several weeks. Though many people are bearish, I keep on mentioning that unless the trend lines are broken, the uptrend is intact and we don't have to worry too much about market falling suddenly. And even to my surprise, to some extent, market has been extremely robust, at least in terms of the market ETFs movement. SPY is nowhere close to breaking any of the trend line support. I was careful after the bearish headwind came in the weekly, but there was no break from support, so I was not going to take many short trades, and I did take some. I'll review them, so you will see how the shorts are working out. Nasdaq ETF QQQ again nowhere close to breaking support, went up. This week made a new all-time high. Dia is relatively weaker. We can see that from the relative performance tilting down. It also displayed a bearish headwind in weekly. Again, yesterday the support held beautifully. So the uptrend is intact, and IWM is the strongest in recent periods, sharply going up. Trend line is intact. So every market ETF is bullish. Let me also explain another way you could trade the futures or ETFs. I mentioned on one monitor, I keep an eye on the market ETFs. Let me change these mega cap stocks to market ETFs. SPY, QQQ. You could use futures or ETFs. I'm using ETFs now. IWM. Why I sometimes prefer ETFs? Because it shows the gap down very clearly. And DIA. If you are trading futures, then you may choose the one that is the strongest for buying and the weakest one for shorting. And one of the intraday entry techniques is Q gap entry technique. That works very well, like all other techniques. Now let's look at these four market ETFs. SPY opened here. That was below previous day's low, so it was a gap down open. QQQ opened here, which was above previous day's low, so it was not gap down. IWM opened here below previous day's low, so IWM also had a gap down open. DIA opened here, which was below previous day's low, so DIA also had a gap down open. So DIA, SPY, IWM had gap down open, QQQ did not. So we were going to look for gap trade, either long or short. What happened after that? DIA tried to break out and pull back. Pull back inside early range and then below early range low. SPY tried to go up, pull back inside and then below early range low. Whereas IWM broke out, also pulled back, but didn't go to the early range low. So if you are deciding to trade one of the market ETFs or futures, you may buy only the strongest, and in this case the strongest is decided not by percentage change but how price is moving relative to the intraday automatically drawn pivot levels. Interestingly, a bullish headwind appeared right on this candle. It also had a bull release signal. And when price was pulling back, it had very high activity. Price recovered and displayed a bullish color candle. So if you were deciding to buy one of the ETFs or futures, you would buy IWM at this point, and you could put stop below the swing low. Of course, it went up much more, and more than risk distance was covered. You could book partial profit at this pause level itself. And if you are trading multiple lots or say 300 shares, then you could book profit on 200 shares, leave the 100 shares at original position and close it out at the close of the day. Again, if you are trading one of the market futures or market ETFs, then the decision of which one to take is based on how the price is moving relative to the intraday pivot levels. That would lead to selection of IWM. Now, if I wanted to take IWM using simple gap long setup, then the long entry would be at this bar using 5-minute bar. So somewhere in the middle of this, currently I'm using 10-minute bar to fit all the instruments together. Using 5-minute bar, the entry would be somewhere in the middle of this bar, upper end of the bar, just as it closed above early range high. And if I'm using early range breakout technique, my stop would be below early range low. So my risk would be this much. Again, when it came to the pause level, my risk was covered, I would exit. See the difference between stop loss level. Let me draw again. If I am using early range breakout technique, my entry is here. Okay, let me do horizontal line. My entry is somewhere here. My stop is here. And if I am using the technique I mentioned earlier, then my entry would be here. That is using the concept of, you can say something like go with flow, but using intraday pivot level. In this case, a bullish headwind was also there, bull release was also here. My stop would be here. So this would be my risk, and in the breakout technique, early range breakout, my stop would be this much. In either case, I would hit the profit target by this pause level. Again, the question may be that which one gives higher profit, and the answer is doesn't matter. So long as you are using the techniques consistently, after 100 trades, your profitability will be more or less same. It doesn't matter. Both of them using a pullback and then waiting for a bullish color candle at major support, that technique, or early range breakout technique, or in this case we didn't have, but let's say here, let it pull back, give a bull release signal. I would prefer to have high activity, which was not there, but pressure was there, so that made the requirement. So all the three techniques are available here. One is using the go with flow kind of setup at this bar, one is early range breakout at this bar for IWM, both of them. And for third technique of using bull release signal, so we wait for it to get oversold, wait for the bull release signal, let price reverse from major support. It was true in this case, and we want either high activity or bullish pressure. That was there. So for SPY, the entry would be at this point, stop would be here, and when price came to pause level, it would exit with profit. So all these techniques give equal profit after 100 trades. All of them are very robust. Again, one is breakout technique, one is go with flow technique, one is using the box technique but using intraday chart. So market ETFs coming back, market ETFs are bullish. What about QH? It was weak one day earlier. If we see the very useful 1 month to 1 day picture, 1 month to 1 day, sector advance decline, industry advance decline, stock advance decline. From bullish it became little bit bearish until today. Then on Friday it turned very strongly bullish again, especially for sectors. 100% of sectors were up, 65% of industries, and about 58% of stocks were up. Now looking at that, one may think Friday was bullish. Yes, certainly so, no doubt about that. And that is when sometimes you may see, was Friday bullish enough to recover from the loss of Thursday? That one we can see from the Q edge other graph, that is the sector performance graph, 1 day and then 2 day period. 1 day, that is on Friday, everything is up, that is great, the red bars. But over 2 days, we can see 7 are still down, only 4 are up. That means though Friday was bullish, it could not compensate for the decline on Thursday. That's why over 2 days, Thursday, Friday together, 7 sectors are still down. 4 are up. Which ones are up? Let's see. Communication services up, consumer discretionary, consumer staples. Now Infotech 0.01%, so let's say it is unchanged. 3 sectors were effectively up over 2 days. One is consumer staples, that is defensive sector. If that is up over 2 days, doesn't say market is bullish. Next is communication services and consumer discretionary. So let's drill down a little bit and see what was changing, which industries were going up in communication services and consumer discretionary over 2 days. I usually don't go into this much of detail, but those who use Q systems, Q edge, Q vital, they know all these things are there, but let me explore a bit more detail. And why I am doing so, because I may not look for trading ideas today. Let's look at the sector level. Sector level, the sectors over. Let me look at 2 day period, because I am trying to see Friday's up move could compensate for Thursday's down move or not. The answer is no, because 7 sectors are still down over 2 day period. 4 up. Which ones are up? Communication services, consumer discretion, consumer staple. Staple is fine. It is Infotech, we saw almost unchanged. Consumer staples is fine. Defensive, I want to drill down into communication services, consumer discretionary. Let's drill down into the industries of communication services. And I would like to look at the percentages. For trading purpose, I want to look at the score. But now let's look at the percentages over 2 day period. Which ones are up? Let's say these are significantly up. Which one are they? Broadcasting, telecom alternative carriers, publishing. These three are not non-defensive. None of them are expected to carry many high growth stocks. So 3 of them, you may say defensive: broadcasting, carrier, and publishing. Their business is steady. Advertising, movies, entertainment, I don't know. So why don't we drill down? Let's first drill down into both of these: movies, entertainment, and advertising, to the stocks and see what kind of stocks went up. And I'm looking at S&P 1500 stocks now. Q edge has S&P 1500 stocks. Let me sort by industry. In advertising, what kind of stock went up? IPG, OMC, TTGT. I don't know much about them, not well-known stocks. Doesn't sound like high growth stocks, then I would know, or you would know. If we look at movies and entertainment, Disney, Netflix, probably this went up because of Disney, Netflix. When you look at the market at such granular level, you start to have an understanding that yes, Friday was bullish, no doubt about it. There is no different way of putting it, but was it enough to reverse the down move of Thursday? The answer we found is that no. For few sectors only it could do that. And if you drill down into the industries, not many industries were growth stocks. So that remains something to be cautious of. Doesn't mean market is bearish. QH is also bullish as of Friday. What about Q Finder? That shows the balance between bears and bulls using your own custom symbol universe. I use the liquid stocks and S&P 1500 stocks. The weekly picture, if you see, it's balanced. If we look at all signals, and you will find something interesting. Reversals very much bearish, 71%, but strength very much bullish, 91%. Why? What does it mean? We see it in the breakdown. Large number of gap ups and then equally large number of reversal signals. That is also a reason for caution. Large number of gap ups followed by large number of Q reversal signals is a reason for caution. Overall, of course, we have to say the picture is mixed. And on Friday, this was the weekly picture on Friday. Was it bullish? Not really. All signals, and now what signals we are talking about? Actual technical trading signals. That is actually balanced. And here you see the opposite thing in play between strength and reversal. Here, huge number of gap down, strength signals bearish, and then huge number of reversal up bullish. So what we saw in the weekly picture, come back again, huge number of bullish strength but bearish reversal, and you will see on Friday it would be bearish strength and bullish reversal. Bearish strength and bullish reversal, which is probably showing, when you think about it, that it's not very clear picture, and that absence of clarity in direction technical signals is clear when we look at the all signals. It is balanced, whether weekly period or daily period. So market is bullish, but in terms of trading opportunities, it may not be the best time to trade. Now let me spend some time on the shorting ideas that I shared exactly 1 week ago. One of them was Boeing. What happened after I shared? Last week was bearish flow, bearish shape. This week also bearish flow, bearish shape. On Friday, it again closed below the trend line support. So on Friday, it gave another breakout idea. Of course, the candle is doji candle, but I shared the idea on this day. After that, did it stop me out? No. In any case, I mentioned I took it using vertical options trade, so I was not going to get stopped out anyway. And I mentioned in Wednesday's class, I am not in a hurry to exit. And it again pulled back. That is clearer from the weekly chart. So market is bullish, but my short idea didn't cause any harm to me. That was Boeing. And then I shared LUV and airlines. What happened to that? When I shared it 1 week earlier in the market roundup, it was reversing from trend line resistance in weekly, watermark resistance in daily. Shared it on this candle. This week's candle is still bearish color, bearish shape. It could not go above the memory resistance in weekly. On Friday, it closed below the daily memory support. So my short trade is in play. I didn't get stopped out. Then I shared one bank, Wells Fargo. Last week had a bearish candle. This week is indecisive candle. In fact, on Friday, it opened with a considerable gap down. I am still in the trade. It didn't stop me out. That is the point I am trying to explain. And all these ideas, as you know, I don't have the habit of knowing the result and sharing. These exact ideas I shared in the last market roundup. Next is CrowdStrike. I don't know exactly where I shared it, but you see the week earlier it had a bearish shape candle. This week indecisive shape candle. I had shared it based on the bearish headwind, etc. Bearish signals, might not be bearish setup. On Friday, I think it closed below the trend line support. So none of these stocks stopped me out, though the market is bullish. Some of them are in profit, some of them may be in small loss, and one trade I exited profitably with GTC order, that was Alcoa AA. That was another stock I shared at the close of this week using the bearish headwind in weekly, false upside breakout in weekly, false upside breakout in daily. I think I shared it on this day and then it fell down. I had a GTC order at 50% of max profit on the vertical position and it exited soon after market open on this day. What is the point? The point is that when I am trading with all the forces behind me, market was bullish, but it had several weaknesses. When I shared the trade ideas, what were the weaknesses? There were bearish headwinds. That was probably the only weakness that I could see and I shared in the video. Only weakness, many bearish headwinds in global markets as well as USA market ETFs, and a large number of bearish headwinds in USA weekly charts. By the way, that is still continuing. We saw already large number of bearish headwinds are continuing in the weekly chart. That was my reason to start to take some short trades. I used verticals, not stocks. That means I had time in my favor. I was not going to get stopped out even if the instruments went up. I had time with me till the expiry and they are working out pretty well. Why? I think because they were 360-degree trace. I looked at different factors when sharing them. I would like to go through two more stocks. TJX, that is one I shared I think on Friday during market hours on my forum sagarnanthi.com. One broken, another to go. And you see how I am using, and you may use, very precise entry technique. Apparel retail was very strong, no doubt about it. One glance at it, you see it is very strong, and I could look at the weakness during market hours. This is 2 p.m. New York time. In real time, I could see apparel retail was weak relatively and it was decelerating. The pace columns show deceleration. So deceleration plus weakness. So I was looking for shorting ideas. I found a stock that was down, overvalued stock. So that allowed me to short. Small earnings growth positive, but that's fine. It is overvalued. That allowed me to short. In itself, the industry was weak. 73% of peer stocks were down. Earnings is on 24th February, still long distance away. And I found the chart. That is what I shared. Weekly backdrop color changed to magenta, bearish. Daily was going up, but it broke below one trend line support. And this is as of 2 p.m. I am sharing in the forum. I mentioned one trend line broken, another to go. If you are risk averse, you would short after it breaks below the trend line support. Are you taking a huge risk if you short when I shared it? Probably no, because of signs in bearish headwind signs in many stocks, and because the industry itself was starting to turn around right on that day, right on Friday. We are not a single day late. So it is expected a stock like this will pull back a little bit. And we need just a little bit pullback. So I don't think it is risky to short based on the chart I shared. However, if you are starting with Q systems, you may wait for the second trend line to break. Once you get confidence of how to use the system, meaning not only this particular stocks chart, but how the Q edge is working, how the peer stocks are acting going up or down. We saw more than about 70% peer stocks were down, how the market breadth is. When you see that, it is okay in my view with a little bit of experience to short it. Another reason is my stop is very narrow. That is a constant in all my trades. And TJX, I think I traded again with vertical, so I was not in a hurry to exit the trade. Even if it went up, I would not get stopped out. That was at 2 p.m. But let's look at TJX here, see how it closed. There is no trend line support. now nearby, and it closed. If I look at the intraday chart, it could not close any lower, closed right at the low of the day. So that, what is the point? The point is that if you are using queue systems 100% real time across sector, industry, fundamental, technical, market strength, weakness, you are able to precisely enter. You don't only, not only you don't have to wait for next day, you don't even have to wait for the market close. You may use the fine tune this precise entry chart to enter early. Another last talk I wanted to share, slightly above 1 hour point, but let me share this. That is Netflix. The trend line memory support resistance work extremely well, and you know that, like other signals, going through also works very well, headwind also works well. But when Netflix went up so sharply after earnings, I noticed that it was going above early range. No, no, not early range, here is the memory resistance in weekly. That was also going above the watermark resistance in daily. What would happen in that case? The call options would be prohibitively expensive when it gaps up so much and keeps on going up after that. And let's switch to the intraday chart. I want to use 10-minute chart to fit the 3 days movement on my screen. This is what happened. On this day, it gapped up here, early range low, early range high formed. It moved sideways for a long time. In fact, moved sideways beyond midday. Remember what I mentioned earlier? I am reluctant to enter a trade when price is still inside early range, high and low. Inside early range, didn't break out in either direction. So in any case, it continued to go up. What one could do is to short the call, but shorting call is very risky, so one could short the call vertical at the close of the day. Why? This is not a queue setup, but this would be based on the thought that call options should be prohibitively expensive, because everybody who were short, either using stock and certainly using options, they would panic on this day and they would bid up the price of the calls at the, even at the close of the day, the call should be very expensive. And stocks have a tendency to come back to the trend line resistance. So one could take a short call vertical at the close of this earnings day, and by yesterday it would be in a profit. Now if you see carefully, let's spend some more time. What are the signals on Friday? It came back below watermark resistance, so it created a false downside breakout. It came back below weekly trendline resistance with very high activity in weekly, daily both. It also displayed a bearish release in daily. However, the candle color is still green, that's why it is not showing up on the candle chart. It came down with bearish pressure. Now interestingly, it had a huge gap up, but how is the fundamental as per Q Vita? And you are seeing that I am not just trading based on technicals. I did check the fundamentals before considering a short call vertical. You could also consider a long put vertical, because put should be relatively cheaper when suddenly market is going up, relatively, as a concept, not in terms of implied volatility, but put vertical is okay to take. How was the fundamentals of Netflix as per Q age after earnings? It's overvalued stock, poor earnings quality, negative earnings growth. So I don't look at what other people are doing to decide my trade direction. The fundamentals were telling me that it is okay to short. Was the industry weak? Probably no. because when Netflix is a large company, it goes up by so large percentage. I don't expect industry to be weak, and industry was not weak. But with that understanding that it had a huge move up, fundamentals were weak as per Q scorecard, and technically I had a very low risk trade. Why? If I shorted it, even if I used stock to short it at the close, my stop would be just above this day's high. I'm not going to risk the stock continuing to go up next day, which did not happen. So if you didn't take the short at the close of the day, and why I say you would not always consider shorting at the close of the day, because there was no swing short setup using Q technique. So that is fine. Let's look at the intraday chart next day. Next day we would look for a short because it was very extended, but it could come back to the trend line resistance in weekly. It could come to the watermark resistance in daily. It was overvalued stock. So next day we would keep an eye on the stock. Early range high and low would form. We were not going to buy it if it broke out, but anyway it didn't broke out to the upside. It closed below early range low decisively on this candle, precisely on this candle. So our entry short would be at this price point, our stop loss would be at this point. And if you did using stock, it didn't give any big profit. You would not exit at the close of the day. If it was a day trade, it would exit with a small loss. But I was also going to use the option volatility in my favor, so I was not going to short Netflix with stocks anyway. It's very expensive for me. So I traded it with vertical, and by the close of Friday, I have a small profit. Am I going to close it now? Looking at weekly daily, no. If it comes down little bit, my vertical will have, I think, 50% of max profit. Why? Because when it went up, see, my price was very much to the upside. So little bit coming down will change the dynamics of option pricing, and I should hit my profit target. Anyway, my stop is narrow, loss is small. I'm using vertical, so that's how I traded it. Again, this is not a Q trade setup. I took the trade based on the trend line resistance in weekly and looking at the fundamental weakness on Q vital and understanding that long side, bullish side options would be very expensive at the close of that earnings day. I wanted to explain this trade, though this is not a trade, that is a Q trade setup. So please be careful if you are considering taking a trade like this. Maybe after some practice on options, you may do that, and you may not start with a $500, $600 stock to use such techniques. There is a question, do I take consideration of pre-market hours, after market hours? Uh, I don't. In any case, the learning material has everything that I use, and in these videos I explain everything that I use. We are past 1 hour point. The market is continuing to be bullish. As I showed you, I took some short trades and they are working out all right so far. Anyway, I took them as vertical, risk is small, and I book profit in one of them, Alqua. I hope to book profit in at least few others because the weeklies are all looking weak on all those shorts, though the market went up. I'm not going to look for long trades. When short trades taken in a bullish market are not getting stopped out, that is also telling it's not a time to take long trades, because if market was so bullish in every way, 1 2 3 4 5 out of these 5 shots, none of them stopped out. That is not a time I am going to look for many long trades. I do have some long positions. Some of them I shared in forum earlier. Recent days, if you have noticed, in the forum I have not shared any long trade, and usually the forum trades give you an idea whether I am trading on the long side more or short side more. But the market is still bullish, so I am not suggesting taking many shots unless you are trading like me using 360 degrees technique. Once you get used to it, you just remember, I remember, we just need You just need 60% success rate, 1:1 reward risk ratio. I always keep that arithmetic in mind, so I'm not worried about stopping out few times. Netflix, I took on vertical. Yes, hi Harry. I am not going to short a $580 stock with stock, because if it gaps up, it's going to cause me a lot of pain. So I'm not going to do that. Who knows? Disney may say I'm going to buy Netflix. That's going to not happen. But theoretically, I'm not going to short a stock that went up so much to short it using stock verticals or low risk instruments. I don't remember the exact strikes. Maybe if I close it with a profit, I will share the detail. That's all for today's session. Thanks a lot for joining. One thing you see that whether global market, whether USA market, whatever be the market condition, if you are using sector, industry, market fundamental in your favor, I again repeat, it is difficult to get stopped out. You probably know that by now. Thanks once again for joining. I look forward to seeing you in our next session, which most likely will be on Wednesday, 8 a.m. New York time. Have a great weekend. Keep safe and trade profitably. Thank you.